And this is it. Good morning. We're live. We are live on Facebook. Actually, we're live on Facebook, on YouTube, on LinkedIn. Good morning, America.
Good morning.
Hey, guys, this morning we have a special guest, and it is. Let me just move my all my little things around here with my stream. Usually, I have the technicians, I have the guys working with me, but it's okay. So today we have Daniela from CMG Home Loans who comes, and she's actually going to help us debunk a lot of the myth when it comes to mortgage pre-approval. And I'm gonna put that music a little bit lower, right? What do you think?
Mhm.
It's a
Yeah,
little bit overwhelming. I want to jump into it because we have a lot of things to cover,
perfect.
and I'm hoping that. Thank you for guys for tuning in. Please feel free to again put in your comments. Good morning. If you could just put in your name because I just see that you're a Facebook user. Good morning.
Good morning. Good
Feel free
morning.
to ask your questions about this. So today's program is here we go, debunking mortgage approval myth with Daniela. And all those myths are emanating from buyers and also agents alike. A lot of
Mhm.
the times agents have those, I don't know where they get those notions and those ideas. And the idea of the program came in just because of a few conversations I had with agents, and I'm like, what are you talking about? Right. So here we go. Let's
Let's
go
do
in.
it.
Yes, so Daniela is, let me repeat, Daniela is, we're going to get all her information towards the end of the program. And Daniela is with CMG Home Loans. Our office is based out in Bayside, and she's been helping out a lot of our buyers and a lot of our agents, and she's been running some crazy good home buyer seminars in Spanish. So she's amazing. Thank
Oh.
you, Danielle. I know
Thank you,
there is a
Gigi.
little bit of favoritism right here.
Hi, everyone. Thank you so much for being here. Yeah, again, my name is Daniela Vaca, and I am a loan officer for CMG. And I have the pleasure of, working with Gigi and Remax and, many other agents. But this is an amazing industry. I'm very excited about, what's happening, what's going to happen this year. And let's just debunk all these myths so we can,
Yes.
get started with our goals in this year. Let's do
Yeah.
it.
Yeah. So the first myth, let me go and move. So I have a couple of slides prepared. This is very low production. Okay. I don't have a big budget, right?
Yeah, we don't need any more.
Oh God, I gotta tell people I'm in my live. They keep on texting me,
I know
jump
it
on the
happens.
stuff.
I had to turn it
So
off.
there is the myth, and this is a lot because we're in Queens. So many of us, I guess you hear, we all have a little bit of an accent, right?
Mhm.
Daniela is from Colombia. She's got this super sexy accent.
Ah.
We all know where I'm from. And a lot of the buyers gets confused. And I want you to actually talk about it and decipher it and make sure, like, this is more addressed to the non-agent population out there who's watching us. You know, Daniela, we have a lot of people from overseas watching us.
Mhm.
Not right away, but afterwards. So it's also good to explain to them what we're doing. You know,
Mhm.
they could be investors in America. We have home sellers as well who like to go jump on the show later on and see what we are doing, because a lot of
Right.
they learn a whole bunch of stuff. So anyway, so primary residence and first time home buyer confusion.
Mhm.
I
Yeah.
know. Let's explain. Let's see, like, in all the cases you've seen and where the confusion comes in. Maybe it's in the wording.
Right,
Go.
right. No, this is one of the most popular ones that I've come across all the time. And, especially in this Hispanic community, but we were all just talking about that it could be the wording of it. Because the primary residence and the first time home buying is totally different things. Um, we are talking about two different things when we are talking about these two things. A primary
Yeah.
residence, we are talking about occupancy. Okay, occupancy of the property you're buying. Is it going to be your primary where you're going to be living, or is it going to be your investment home, or is it going to be your second home that you're going to go visit when you're, on vacation or things like that? So primary residence means that it's going to be your primary where you live, where you're going to be living, and then commuting to work and coming back to your house and all this things is a primary home. And
Can
then
I add? I think to me, a primary home. This is how I see it. This is the address you put on your tax return.
in
Right?
your ID,
Address.
pretty
That's
much.
it. That's your primary. Yeah, that's your primary residence. That's the address you're gonna put on your tax return.
Your mailing address.
Your mailing
Pretty
address. Your main mailing
Exactly.
address.
Your mailing, exactly, because this means this is where you
Yeah.
get your mailing. This is your home, right? So
Yeah.
primary residence. In Spanish, they call it mi primera casa. So in Spanish, I can definitely see the confusion of primera casa and casa por primera vez, because
Ah,
they
yeah.
both sound
Very
pretty much
good.
the same, but
Yeah.
it's not the same thing. So that primary residence, we already established that the primary residence is occupancy. It really is where you're going to be living. Now, first time home buyer is that you're buying your house for the first time.
Or,
Okay. Or you
or
haven't hold, this is another thing. You haven't hold property over you haven't hold title of a property for 3 years. Why? Because, for example, you buy your house for the first time, you sell it. You spend 3 years without holding title of a property. You become a first time home buyer again.
buyer. So let's say like you sell your property and you decide to go and rent some place because you're not too sure of what you want to do next. Which is,
Exactly.
yeah, okay.
And then you automatically become, after 3 years, a first time home buyer. Okay.
Okay. So you
First time,
cannot become a first time home buyer buying one property and reselling it, and when you buy the next one you no
no,
longer
because you need the period of 3 years without holding
okay.
title of a
You hear
property.
that, people? Very
Yeah,
important.
it's very important because it doesn't, I come across this all the time. People say, oh no, I cannot help my brother, my mom, my sister, everybody, because I want to buy my house for the first time. And I'm like, okay, when are you gonna buy it? Probably down the road, like in 5, 10 years. I'm like,
Okay.
okay, but hear me out. Let's debunk this myth.
Yeah, yeah.
First time home buyer is not just a once in a lifetime thing. It
Okay.
is not. Many
That's
people
good.
think it's just they're gonna ruin their lives if they're helping their family to
Yeah,
acquire.
yeah, yeah.
No, first time home buyer doesn't mean that you it's a once in a lifetime thing. So it's 3 years without holding title. And a first time home buyer doesn't really mean that you're gonna get anything for free just because you're a first time home buyer either. So many people think that because I'm a first time home buyer, I'm getting like, open, clear to go to the heaven. And just like, what
Yeah,
the
yeah, yeah, yeah.
no.
Okay.
It does give you benefits, of course, when we're pricing the loan, when we're writing the loan, when the underwriter sees the whole picture of it. They can understand certain things because you're a first time home buyer, and that opens up a different view for the underwriter to look at your case. So that's a very important thing to know. Of course, there are grants, there's things available, by the government, by different lending institutions that only offer it to first time home buyers.
Okay. So that's going to be another topic that's going to be for another time, right?
Okay, of course,
And
yeah.
then you can always, we're going to have Daniela's information at the end, and you can always call her and ask her many questions. Next myth that I think we need to, that's a big one. It's always the same thing, like pre-qualifications versus pre-approval. And trust me, especially nowadays in real estate, and within the Long Island Board of Realtor and one key MLS, we have these new rules where all the offices need to have one standard operating procedure, which they need to disclose to other cooperating agents. So that standard operating procedure in our office is we need for the all the buyers for all showings, we won't show anything unless you have a pre approval from a bank, not a pre-qualification. And this
Yep.
is where a lot of the times I'm seeing prequals. I'm just seeing a piece of paper that means nothing.
Hmm.
Sometimes I have the name of a loan officer. I don't even have their license number.
Yeah,
Yeah,
exactly.
it's go for it and just like let's go with the difference, and even the difference in quality. What's the difference between a pre-qual and a pre-approval?
Exactly. Okay, so the difference is very simple. The pre-qualification, it's when we as loan officers hear a scenario, right? So you're coming to ask me, oh, how much do you think I will qualify for based on your income, your credit,
Yeah.
not running it, but what you tell me about it, your
Yes.
credit and the savings that you tell me you have. So this is just a simple discussion of like me seeing a scenario. Oh, I work for this company for 3 years and I make this amount of money. Um, my credit is, Credit Karma tells me my credit is 700, and then I have $30,000 in the bank account. So based on this information, I can do some quick math and tell you what you will be pre-qualify for. I have not taken a look at your pay stubs. I have not seen your W-2s. I have not seen your tax returns. I haven't run your credit. I haven't seen how many, debts do you have. I
Yeah.
haven't seen your bank statements to see that you actually have the money, that is not on, maybe you have it in your 401k or things like that. You just like telling me a scenario. I'm telling you something. This is a pre-qualification. Some people, like I also do pre-qualifications. I can give you a piece of paper telling you what you will be pre-qualified based on this scenario. Now, when I'm making a pre-approval, I'm doing the yeah.
Yeah. I mean, a pre-qualification is sort of, to me, and this is purely my opinion.
Hmm.
It's useless. How can you, especially if you're going to be going to working with another agent, it's just the opinion based on non-verified facts.
Exactly, exactly. And it all comes down to time. I feel like, do you really want to waste as a client your own time looking at properties and getting yourself excited over a house that when you get actually pre-approved, you don't qualify for? And of course, it's the agent's time, the loan officer's time, all these people's time, but at the end of the day, it's the client's time too.
More importantly, yeah, it's the client's time, and they wasted their time, and it's a big disappointment. Instead,
Exactly,
you could have saved months by just getting ready and have a plan of action and working with your agents, having a
exactly.
pre-approval in place, knowing what kind of monthly payments you can afford. The
Right,
agent and the loan officers can basically help you, like choosing some properties according to their taxes,
right.
and what basically like saying, okay, we can enter with an offer at that price knowing that the taxes are that much, and then if you go into co-op purchase or condo purchase, you have to
Mm,
add maintenance and all
and
common
all these things.
charges, which
Exactly.
yeah, so again, this is like a group effort.
Yeah, it saves you
But
a heartache, honestly, because I feel like if you, especially if you're taking your family of house shopping and everybody's excited, and then when you actually get down to business, it's not the reality. So it's a very hard reality check that many people go through when they do decide to do this.
yeah.
And it's funny that we talk about this because yesterday I got an email from Chase saying that I qualify for like 700,000.
Woo!
But have they checked my credit? Have they seen my pay stubs? They haven't done that. And many people actually get these emails from,
Yeah,
where they
yeah,
actually spend their money. They get these emails and they go, oh, now I can buy a house of let's go house shopping. And they
yeah,
actually, and I'm like, this is not a pre-approval. This is the bank trying to get business, and it's sending out these emails, but it doesn't mean that you're actually pre-approved. So be careful with that, especially if you're actually getting in contract
yeah,
with something, because that's when things go wrong, when you're actually
yeah,
signing something over a
yeah.
pre-qualification. So it's a very red flag right there. Now,
Okay.
a pre-approval, it's be safe. We also offer something called like commitment pre-approvals type thing. So I can actually, if we go down the process, for example, while you're looking for a house, I can definitely have this scenario, this whole loan gone through processing, underwriting, and get you a commitment. So whenever you find the actual house, you're already approved, not pre-approved. You're approved for the
Not
loan.
yet approved. You just need now to have the appraisal for
Just
the house.
the appraisal title, supply the conditions, and we're closing. Like you're closing in less than probably 2 weeks.
Okay.
So this is huge. But of course, there has to be a process that we're starting the process before you go house shopping. So many people, there's another possibility that you could do.
No problem. Let's move on to the next myth. So we were talking yesterday about finding some of the myth that a lot of buyers encounters, and you were telling me a lot of people sometimes feel they have to file the taxes before applying for a mortgage, and they feel like they would get a better deal if they do. So depending on the situation, maybe you can explain to
Of
us a
course.
little bit more about that.
Absolutely. So
Even agents have been telling buyers.
right. They're just wait for no. So this is the thing. We're in the special time of the year where we can file our taxes as early as I think is the 23rd of January,
Yeah.
all the way to April. So this is the moment that if you have your W-2s, you can go ahead, and if you need your refund, then go ahead and go file your taxes. Or if you're self-employed and you actually, because of business, you actually need to file your taxes, okay, you could do it. But if you're a W-2 employee, we are still going to consider your actual income in the present moment. For example, if you get paid $40 an hour and you make 40 hours a week, then we're able to give you a pre-approval based on that, or give you the loan based on that. Depends if you already have your W-2 from your employer for 2023, then we're probably going to ask you for it. But it doesn't mean that you have to give me a 2023 tax returns to
Right.
close. I actually could, you could close with just a W-2 2023 because you have until April to file your taxes.
Exactly.
You're safe there.
Right. And again, it depends on the situation. If you're going to purchase a co-op and you start shopping for a co-op right now, and let's say in a couple of weeks you find something and you get an offer accepted, most likely that co-op board is going to ask you in their application for you to submit the last year's,
Right.
the latest
Exactly.
tax return. Most likely in that case. So it depends. I mean, there is, you again, case by case, speak to your loan officer, speak to the agent you're working with, and hopefully that agent is experienced enough to guide you through the process.
Yeah.
Oh, and next one is the discount point or points myth.
Yeah.
Believe it or not, I had a conversation with an agent last week who's telling me that until not too long ago, she thought that when you purchase points to lower your rate, let's say if you buy 1 point, it's going to discount your mortgage by 1%. And I'm like,
No,
talking
I
about.
wish.
This is, I wish too. So this is what I was saying. Let's say you have a $500,000 mortgage, and you want to lower the rates, a little bit, and you're going to purchase from that bank. You're going to give them an extra $5,000 so you can lower your rate, but that rate is not going to be lowered by 1
By
point.
1%. No.
Oh, that's, I wish, because I could give you like $15,000 right now, and then my rate will be 3%. It doesn't work like that. So go for it and just explain a little bit about the discount points and how it works and what kind of actually discount on your rate you get.
Right.
This ones that you purchase. Yeah.
This is a little complicated to show, like without making the math, but then it all comes down that every single point of the market that you buy doesn't give you a whole point reduction. It gives you 1/8 of a point.
Yeah. 1/8, guys. So
1/8.
let's go with the math. I'm going to use my phone. So a point a point is 1% of the mortgage, right?
Right.
And let's say the mortgage is, so for that $500,000 mortgage, you're going to spend $5,000, and that's going to give you 1/8 of a point. So from that $5,000, I don't even know how to do that math. This
So
is
it,
uh,
it depends, because the market will give you every day the pricing of every rate in the market available. So basically, once you start looking at the points, yes, the point costs 1% of your loan amount. That's the
right.
cost of
Yes,
it. That's the dollar amount.
but you get a small reduction.
But you get a small
But
reduction.
you
So
get a small reduction over the life of the loan.
yeah. No,
So
that it depends because you can buy temporary buy downs and you
yes,
can
that's
buy
that's different. That's different.
the
That's
permanent
another
one.
thing. Yeah, yeah, yeah.
hmm So
Temporary
there's two
breakdown.
different ones, but then the permanent one, it's based on the market on that moment. So the market will tell you exactly because that's pretty much if you have if you can reduce it by 1/8, then it's gonna be a different price in next day. So it really depends on like what the pricing is. So we have an average, a range of rates that a scenario will qualify for, and then it comes down all the pricing of each of the eighths that you could come down from
So then
that.
we brush on the temporary buy down. So you have
Mhm.
those programs called 2-1 buy down or three
Yeah,
two one buy downs.
which are great
Yeah,
with this high rate environment. Is great because now we know the whole industry knows that the rates are going to come down eventually. We're looking at a very bright future. Probably by 2025 we're going to have a stable economy, but people are buying houses now, so there are ways that you can have a lower percentage over maybe 2 3 years, the first 2 3 years of your mortgage, and then once those time go back, it runs the 2 3 years, and
yeah,
it goes
yeah.
back to the no rate that you actually qualify for. Okay, but then by then the rates are going to be already lower, so your
And you can
refinance
refi. Yeah.
to
So
actually.
we had many trainings in our office on rates buy down. It's a process where the buyer can purchase their own rate buy down, where they would lower, if it's a 2-1 buy down, they would lower their rate by 2% on the first year, right?
Mhm.
Of their mortgage, and then the next year it would lower to 1%, and then after that it's going to go back to
To the
the
note rate that
normal rate that it was.
hmm
um, it's done with in accordance with the bank. You're going to put all the funds that are going to help you lower that rate into an escrow account with the bank. So it is really like something that is really safe to do. And
it's
the
one of my
bank,
favorite things
yeah,
because it's like paying your interest ahead of time, but it's hold on there. It's like right,
yes,
it's held there, and then if you happen to refinance, this money is not wasted. It comes back to you lowering your principal,
right.
which is
And then
great.
right.
So yeah, if you don't actually refinance within that 2 or 3 year, you refinance sooner. You can that money's not lost. That
No,
money's going to
no, no.
come
The
back.
money, the money is protected and it's yours,
Mhm.
which is good. So this is a good thing. Do you like rate buy down? This is a personal question
Mhm.
versus an adjustable rate mortgage.
Uh, at this point of time, I do think it's safer. Yeah,
Mm,
just because, yeah, like the market right now. I mean, I guess that the adjustable rate mortgages are good too, but then some of them are sometimes it's very expensive anyway. So
okay,
it's a little easier to just go for the fix and try to do a temporary buy down, which serves the same purpose.
right.
You're
And
actually
by the way, some of the sellers would be okay giving a concession
concession.
for
Yep.
buy down, so it doesn't have to cost too much to the buyer. So there are many, many ways you guys can do that.
Yeah,
Uh,
actually, I did a loan for one of my a good friend, and he was buying a condominium, and he was very concerned because back in the moment it was like 7.5% rate
yeah,
in that moment, so his monthly payment was crazy. We were able, his appraisal came back a little higher, so a little lower than it actually is, higher, sorry. So we were able to use that concession to lower his rate for like 3 years. So he's got a 3-1 year. It's really good. I
Yeah.
think a 3-1. It's really, really good. He's very happy.
All right, so let's move on. It's already you see we going we going
Yeah,
on
I
and
know,
on
right?
and on and on. So now listen, okay, another one where you're meeting with buyers, right? Especially you're meeting, and especially with a lot of us in Queens, we like to save some of our money and keep some cash at home.
Mm-hmm.
And then you were talking about money being in a 401k and not
Mm-hmm.
being, we have the money, but it's not all in the bank, but we think we have it, right?
Right, exactly, exactly. I mean, I
let's
used,
let's go over we're talking about the money for the down payment, all right?
mhm.
Because the closing costs, you have like 2-3 months to make sure you have that
Yeah, it
money in
happens a lot
place.
in
Yeah.
my community that, like they
Oh,
make this in
in
their
any
piggy bank under
community.
the mattress.
I know. Hey, okay, okay. You know what? Sometimes it's a cultural thing. This is what it
It is,
is.
and I love it, but at the same time, we have to be smart because I always tell people, like America is a country that takes care of all these things about laundering money, and every single
Yes.
bank is going to be checking those bank statements and asking you where that money came from. So if
Uh-huh.
you have it under the mattress, it's not an excuse. It's really not something that you can tell the bank, oh no, it was just in my house, just hanging there. No.
Yeah, especially when you work in some service industries, if you're a hairdresser,
Exactly.
if
Yeah,
you
I
work in
used to
a
be a
restaurant, you
server.
get a lot of tips, you get a lot of
Oh my
cash.
God. I
So,
used to serve too, and I used to have a lot of cash, and actually I was like, it makes no sense. I don't It's cold out. I don't want to go to the bank right now and deposit it. Like, I'm just gonna keep it here. So it is good. I always suggest to people that get a lot of cash, and like, use it for your groceries, use it for things like that you can spend it in that moment. So your savings, everything that's gonna be towards your buying process, make sure it's all in the bank already, so you don't have that headache of having to deposit money. So just keep in mind that we need 2 months bank statements to close the deal. So if you're thinking about buying a house in March, start depositing all this money that you have saved up and it's
in
cash.
January.
Yes,
Yeah.
exactly.
And that's called seasoning the funds. That's why I put into parentheses unseasoned. So we're addressing this more to the buyers listening out there. It's like, make sure your funds are seasoned in the banks for at least 2 months.
Yeah,
And
and it's
you
very
have the
cute.
statements from that bank with the money in it.
It's
Yeah.
very common to have, like, oh, I don't have the money with me. Actually, my mom has it for me. I'm like, okay. So when we're in contract, your mom is going to give you a check to make sure that it's deposited in your account, make sure it's a
We're
check.
gonna go. I think this is gonna be the next question. Let me see if it's the next. Yes, let's go over this
Okay.
one because you
All
were
right.
talking about. Yes, very good. Go.
Exactly. Yes. So we have different programs, but talking about FHA loans, these are very important things to know. FHA is going to ask you for the donor's bank statement or the donor's transaction history, and we need to make sure that the money was in that bank account. It was not cash deposit. You
Right.
know, that's a big thing. For conventional, thankfully, we only need the cancel check. We don't really need the donor's bank
Right.
statement. But for FHA, we need to make sure that that gift was made, as a check, all these procedures. So make sure before you do any of this money movement, you talk to your loan officer and tell them, hey, my money's here, my money's there, my money's there. How do I do
And
this?
especially if your money is overseas.
That's a big one.
Yeah, even like you could. I mean, look, we have situations where money is overseas. You're the parent, and you want to make a gift to your children,
Mhm.
which is very nice. You want to
It's
help
normal.
your kids
Yeah, it's something very common.
house. But like you need some planning to make sure that again this is not being regarded as some sort of money laundering by the government. So you want to
Exactly.
give yourself enough time to bring the funds from overseas, put them in your bank account, have it seasoned, and then you can make the gift.
But the thing is,
Sometimes,
like,
yeah, yeah.
there's no limit of amount of gifts that you can receive. So that's
Because
a
I'm hearing stuff. Oh my God, like, oh, don't worry about the buyer. The parents are very rich. overseas they have all those millions of
Yeah,
dollars
they're overseas.
overseas, and it's like, oh my god, and the person is like, yeah, but I like the agents would say to me, oh, but I don't want to offend the buyer's parents, they're so rich and stuff, and I'm like, hold on, but
You
money
just gotta
laundering
explain
in
how.
America, it's like maybe we can explain to them what the laws
Yeah,
are,
and I think it's something very it's so common that if they Google it, they're gonna find out that you're telling the truth. Like that's one of the things I when I have clients that are second guessing what I'm saying, I'm like, I'm more than happy to show you the article that you can find on Google. You can do this research yourself, so you know that this is a standard procedure on the loan business.
right?
Um, which is, this gives me it brings me back to the 401k money, the annuity
Yes.
money, all this money. You can use all these funds to close on your property for
So
sure. Make sure
yeah,
that you start the process ahead of time, because there is a process to get this money. So make sure
yeah.
that you work with the loan officer on the right time, because nobody wants to wait 3 months to close. Nobody wants to wait
And
4.
how much gift can you give? How much, if we're gonna quantify stuff, how much is permissible? The whole down payment?
For certain loans, yes. For the FHA loans, 100% give funds for down payment and closing cost.
Okay.
Yeah, so it is permissible. Also depends on the occupancy of the property. So if we have an investment property that we're buying, there's no gifts allowed. No
So
gifts.
let's go back. You're also offering. You guys have these very creative programs where you helping buyers source their down payment funds with crowdfunding.
It's awesome.
So that's so same thing is, let's say if the buyer is able to
Raise.
get gifts
Mhm.
from all over America, the full amount of the down payment, that's permissible with FHA,
With
right?
FHA and Fannie Mae, yes, we actually, that program is called Funded, and
Yes.
it works like crowdfunding that we were just talking about, and we don't need any seasoning there, because that is the way that the program works. As
Right.
long as
So
you're
if
doing
you
this
guys want to
program.
hear more about that, call Daniela or go on
Oh
her
yeah.
website.
Oh, absolutely.
It's definitely, it's a very interesting concept.
Yeah, that's worth it.
It's very much on trend because
Yep.
a lot of people do ask for GoFundMe and stuff like that, and
Hmm.
other people's money to help them with their project. So why
Right.
not? And if it's legal, let's go for it. Why?
Exactly. And
Yeah,
also, like, people get married, people get,
yeah,
graduation
yeah.
gifts. I'm like, why don't you just, save up that money for your down payment? Exactly.
Exactly. Exactly. All right. Let's see what's. Oh, I don't even know what I'm clicking on. Oh my goodness. I was gonna go. Oh no, no,
Designer.
no. The last one. Okay. Cosigner myth.
Okay,
That
cosigner.
cosigner myth. Right. So you were telling me, like, when we were talking yesterday, you were saying, like, in some instances you have you pre-qualifying the buyer, and they're saying, oh, my credit is great, I have this, I have that, and then once you actually go into the approval process, that buyer has on the credit report, sorry, this is the cosigner, not the users. Sorry, I'm retracting everything, I'm going ahead. Designers. So no, we were talking about that in the sense that you get some buyers that would say, oh, I can go on the loan with my cousin, my brother, my mother, and then my other best friend, they can help me get on the loan.
Hmm.
What's the myth on that? Well, can you get that many cosigners?
Okay, so yes, you can, but it has
Oh,
to make
really?
sense. But it has to make sense. It has to make sense. For example, you're not going to get 5 people cosigning for a one-bedroom apartment,
Okay.
right? So that's one. Two, it depends on, like, for example, little things like how many dependents do you have in your taxes. So one of my co-signers has 3 kids, and
Yeah.
there's only one-bedroom house or two-bedroom house, it's very tiny house, and the kids are different ages. The underwriter is going to take a look at the whole picture. It's going to say, okay, so the appraisal came back saying there's only 2 bedrooms and you have 5 kids, and you guys are three adults co-signing. How is this going to work?
Right.
So
first time home buyer,
You
yeah,
need,
loan for
you need
sure.
to make sure, yes, you can do co-signings. And I'm a very big, I'm pro that, because if you're buying a house and there's a whole family that, young adults, and they're already working and they're renting for no reason, why don't you just get your own house and as a family invest and pay it
Sure,
off?
if you're
But
actually going to
whole
live in that
living,
house, yeah,
exactly, it
right,
living there, because there is a household income, okay? But that's one of the things, like, yes, everybody can co-sign, everybody can, chip in and pay the mortgage, and that's the reason why you get such a big loan amount, because we're combining all these people's income. But then it happens that you're getting these five co-signers, and it's only you paying the mortgage. And
right.
I'm
That's
like,
what a
can
lot of
you
people
really
also want
afford
to
it?
have.
Can
Yeah,
you really afford this $7,000 mortgage? Because it makes no sense. I don't want you to get in trouble. I honestly tell that to my clients. I'm like, yes, you want this specific house, but can you actually pay it? You're getting all these co-signers. It's not my place to say if they live there or not. If everything makes sense, well, yeah, they could live there. But is there, like, can you really afford this payment? Because
I know. Okay. I
that's
know.
what.
But again, within our communities, there is that myth that, my cousin, my mother, and everybody's going to help me and help me get the mortgage, and I'll get tenants and stuff like that to pay the loan. And sometimes it's not just the case, so you
No,
have,
it's not. And
yeah,
you don't wanna get in that situation where you're just working and living to pay your mortgage, because it's not the dream, the home ownership dream that you had. Like, I am pretty sure, like, when you're just not buying groceries because you have to pay your mortgage, things like that. I'm like, you be careful with that.
yeah, yeah.
Hmm.
So I
But yes,
guess,
you can.
yeah. I want to thank Kennedy. I think this is Kennedy watching us because he was making sure we talked about the home funded
Hey,
program.
Kennedy.
Anyway, thank you,
Yeah.
Kennedy. Uh,
My boss.
the credit issues you were also talking. We were talking about like people thinking they have this great credit, and then when you dig a little bit more into it, then you find out they have a lot more credit usage than the
Hmm.
portrait they had. So you wanna lower
Yeah, of
the
course. So,
credit issue.
um, yeah, so it happened to me recently that I ran this credit. This person told me, "Oh, I have zero debt. I have the perfect credit," and I was very excited. I'm like, "We're gonna run a really good credit." So when I ran it, it was completely the opposite. Unfortunately, he's an authorized user in so many different cards. It's like for all his kids, his wife, and many of those monthly payments have been missed for a few days, and it's been ruining his credit, and he had no idea about it. So I spoke to him and I told him, listen, this is a great way to help your kids to build their credit, yes, but make sure that if you're the author, you are the main person in the account, so you can, control everything that's happening, because otherwise all the authorized user accounts is going to affect your credit, even if it's not you making the purchases, making the spending, that's going to be reflected on your credit. Same thing with, when you're co-signing to help
For
somebody
the
get
loan,
a
yeah.
car, somebody get a mortgage. Yes, you could do it. Make sure that those people are actually making the payments on time. That's a big one.
And
Everything.
then a lot of people don't even understand that will affect what is called your debt to income ratio. A
Exactly. Oh,
lot.
there are ways to actually, work this out.
Yeah, I mean, sure, you have letters of explanations and so on and so forth, but at
Mhm,
some point, I think when you're ready to purchase, you probably need, and it's why you get pre-approved so you can actually
mhm,
plan and see. Like sometimes, like you don't need to stay a consigner forever. I'm sure you
exactly.
can be taken off the loan once
Right.
after a few years and so on and so forth. And people forget it. Same thing with credit. If your children after a few years have built their credit, they don't need 10 years to build their credit. You
Exactly.
need
So
to,
just make sure that, all these this card, this is easy to forget, but then at the moment that you're actually, purchasing something, it's gonna come up, and then we'll have to resolve it. So, I'm happy to help anybody that has questions about this. You can contact me directly, and then we don't really have to do a whole a whole pool of credit. We could do a soft pool, and I
Yeah.
made you see many, all the trade lines and tell you ahead of time, of my, from my experience, what can be done to like, bring up your credit a little more. Of course, there are things that sometimes you need help with, a credit repair person or something like that, because there are things that definitely need help of, experts.
Good. So, I think we went over a lot. The time we
The
usually,
time,
but this
I
is great. This is wonderful. We
know.
have things to cover. This is really great. Thank you so much for like helping us decipher like all those things that we preconceived idea on mortgages when we go for qualification and stuff like that. Those This is
Exactly.
great. You guys have Daniela's information right there. Her phone number just for business. Okay. What is your Instagram handle if they want to find you on Instagram?
Sure. Yes. So it's Danny underscore home loans.
And you use Facebook a little bit or
I use more Instagram. I need to get back to like working on my Facebook. I do have a Facebook page. I just put on the chat. Oh, that's. Let me
in
just
the
do it.
chat you can put your Instagram handle and then
Okay.
you get there. I'm seeing. Thank you guys for your participation. Um, I
Yeah.
I
No. Thank you everybody for being here. Thank you, Gigi, for the
I do.
invite. This is amazing.
Oh, you put it in. You know what? I'm going to copy it because you put it on
Yeah. I
the.
don't think I can text it in the.
Okay, okay. Let me
Yeah.
do it. Let me do. Yeah, you posted it in the private chat, and this is Danny underscore home loan.
Hmm.
This is. I'm just going to put Daniela's Instagram. All right.
Yeah. And then any questions?
So
This is we have so many topics and subjects to go
yeah,
through, but I guess yeah, it has to end
yeah.
somewhere.
And every week we have like an MVP, like the most valuable viewer or player.
Oh,
I
nice.
think I'm not gonna give it to a Kennedy. That's too easy. Okay, we made him come in. I want to thank Luz Martinez for jumping on. I don't know Luz. I mean, I don't know if you're my friend on Facebook or Daniela, but we're gonna make you the MVP this week. Thank you so much. And
Thank
if
you.
Daniela, if Luz, you want to get in touch with Daniela, please do so. If you have some questions for me as well, do not hesitate. And as always, I'm going to hide this. Thank you guys for tuning in. Really appreciate the viewership right here. And until next time, don't forget
Bye.
you can find us at Real Estate Unwrapped on Facebook, on my Facebook, Ed's Facebook, and also on YouTube and LinkedIn. So we're
Amazing.
pretty much on 10 different platforms right now. Thank you
Awesome.
guys.
All right. I'll
Have
see you
a
later.
great
Bye.
weekend. Don't forget those open houses. I know the weather is a little bit,
Yes.
but it's okay. Let's go for it.
There's 30 people open houses so far.
Yes,
Yes.
yes.
Oh wow.
All
Bye.
right, guys. Bye. See you.